Good morning, good afternoon, good evening, whenever you're watching this video. This is Priya Goud, and in this video, we are going to discuss the Test Your Knowledge section of Chapter 1 relating to customs of CA Final IDT syllabus. So, without wasting any further time, let's get started. Moving to the first question of your Test Your Knowledge, which says, what are the provisions relating to effective date of notifications issued under Section 25 of the Customs Act 1962? This is a straightforward question that is asking us about the provisions relating to effective date of notifications. All we need to do is write our answer in points and give them the exact provisions that has been given. So there should be no confusion in writing this particular answer. First of all, we are going to recall what is the effective date of notification. So the effective date of notification will be the date of its issue in the official gazette. So in the very first point, we will be writing that the date of effect of every notification that has been issued will be the date of its issue in the official gazette by the central government. Then we are supposed to write the proviso related to this, which says that if anything is otherwise provided in the notification, then that date will be considered as the effective date of notification. In the third point, we will be writing that if the provision is delayed due to some reasons for publishing in the official gazette, then the date on which the notification is issued will be considered as the effective date of notification rather than the date on which it was published in the official gazette. Moreover, there has been an addition in this particular section related to the special order part, where any particular thing has been given or a notification is based on some conditions. In that situation, 31st March in in the next 2 years will be considered as the effective date. So that point we are supposed to write. We will discuss this point in the later portion when we read out the answer. And later on, we are also supposed to write the non-applicability of effective date, which is in the case of exemptions granted through special orders. So let's read our answer, what has been given in the answer. Let's see. So our answer says that the date of effect of every notification issued will be the date of its issue by the central government for publication in the official gazette unless provided otherwise in the notification. Issue means signed by competent authority and sent for publication to government press. The provision is made as there may be a delay of 1 or 2 days in publishing in the gazette. For example, if the notification is issued on 2nd November and published in the official gazette on 4th November, the notification will be effective from 2nd November itself. However, where any exemption is granted subject to any condition, such exemption shall otherwise specified or varied or assigned that the valid be valid up to 31st day of March falling immediately after 2 years from the date of such grant or variation. The above rules do not apply to exemptions granted through special orders. Special orders are issued separately for each case and communicated to the beneficiary directly by the government. So this is our answer, and we are going to write this answer in points. It is very simple. There's nothing complicated about this particular answer. Just make your points and write it in the exam. That's it. Now let's move to the second question that reads, an importer imported certain inputs for manufacture of final product. A small portion of the imported inputs were damaged in transit and could not be used in the manufacture of the final product. An exemption notification was in force providing exemption in respect of specified raw materials imported into India for use in manufacture of specified goods, which was applicable to the imports made by the importer in the present case. Briefly examine whether the importer could claim the benefit of the aforesaid notification in respect of the entire lot of the inputs imported, including those that were damaged in the transit. So basically, in this question, we are going to consider a case law which has actually happened, because the provisions do not directly apply to this particular question, whereas the facts of the case are very similar to a landmark case judgment of BPL Display Devices Limited versus CCEX Ghaziabad 2004. This judgment was given by the Supreme Court, where it has held that the benefit of notifications is applicable to all the goods that are intended for use. So it doesn't matter if the goods were actually used in the production, but the intention of the importer while importing the goods is to be considered over here. Since the goods were imported for the purpose of manufacture of a final product, but they could not be used due to their loss or their damage, and thereby they were intended to be used in the manufacture of the final product, and because of the damage they were not able to be used, the notification would be applicable and the exemption would be granted in regard to those goods as well. So let's read the answer, what has been given in the answer. Let's see. The answer says that the facts of the case are similar to the case of PPL Display Devices Limited versus CCEX Ghaziabad 2004 174 ELT 5 by Supreme Court, wherein the Supreme Court has held that the benefit of the notification cannot be denied in respect of goods which are intended for use for manufacture of the final product, but could cannot be used due to shortage or leakage. The apex court has held that no material distinction can be drawn between loss on account of leakage and loss on account of damage. It means that they have considered leakage and damage at par. The benefit of the said exemption cannot be denied as inputs were intended for use in the manufacture of final product but could not be so used due to shortage, leakage or damage. It has been clarified that, by the Supreme Court, that the words for use have to be construed to mean intended for use. This is the important point that we are supposed to write in our answer. Therefore, the importer can claim the benefit of the notification in respect of the entire lot of the inputs imported, including those that were damaged in the transit. So basically, we are going to apply the benefit of notification to the entire goods rather than just the goods that were good or actually used in the production. Now let's move to the next question. It reads as, Messrs Pure Energy Limited is engaged in oil exploration and has imported software containing seismic data. The importer is entitled to exemption from customs duty subject to condition that an essentiality certificate granted by the Director General of Hydrocarbons is produced at the time of importation of the goods. Though the importer applied for the certificate within the statutory time limit prescribed for the same, the certificate was not made available to the importer within a reasonable time by the Director General of Hydrocarbons. The Customs Department rejected the importer's claim for exemption. Examine briefly whether the department's action is sustainable in law. Basically, as when we go through the question, we understand that directly any provision does not apply over here, but a landmark judgment does apply over here. That judgment says whenever there is a condition attached as to the import and having an exemption or claiming an exemption thereto, in that case where the condition attached is such that such certificate or any other document is required from a government authority or let's say functionary, in that case a public functionary, in that case if it is on the part of the failure of such public functionary of not giving the certificate or the document in time, the person, that is the importer, won't be judged in this matter. The importer will be able to claim the benefit. So basically this was given in the case of Commissioner of Customs versus Tulo India Operations Limited 2005 by Supreme Court, where it said that when the conditions are not within the power of the importer and in the power of the public functionaries, the non-compliance cannot be held as a condition precedent that would disable the importer to obtain the benefit of the exemption. And since Director General of Hydrocarbons is under the Ministry of Petroleum and Natural Gas, it can be constituted as a public functionary, and therefore in the present case Messrs Pure Energy Limited will be able to claim the exemption and the department's action will not be sustainable in law. So right now this was the thing, the crux of the present question. We are supposed to write it in a proper manner as given in the answer key, and as per the answer key we are firstly going to give them the judgment that has been given in the present case. Then we are going to connect the judgment with the present facts that have been provided to us, and finally we are going to write the solution to the question. So just go through the answer that has been given and then try to write it on your own in the format that has been prescribed. That is, first of all you will be writing the actual case that has happened, then the facts of the present case, and finally the analysis along with the conclusion. Moving ahead to question 4. Explain with reference to decided case law whether clearances from domestic tariff area to special economic zone is chargeable to export duty under the Cess Act 2005 or the Customs Act 1962. So basically we are supposed to write the entire case law over here. That means we are going to quote the case law, we are going to tell what the case law said, and finally we are going to give the conclusion whether clearances from DTA to cess are chargeable to export duty under the Cess Act and Customs Act. So this was decided in the case of Tirupati Udyog Limited versus Union of India in 2012 and SR Steel versus Union of India 2010 case. Here we have to consider the provisions given under the two acts, that is Cess Act 2005 and Customs Act 1962. So basically both the acts say that if the charging section is triggered, in that case only that person will be dutiable. So firstly, when we consider the Customs Act 1962, and as we have gone through the section 12, that is the charging section for this act, it says that the charging section would apply only if the goods are imported into India or exported out of India. So in the present case, when we talk about DTA and cess, both the areas are in the territorial waters of India, and because of this very rule there is no actual importation or exportation of goods, and hence the customs duty is not leviable as section 12 is not triggered. Now moving ahead to the Cess Act 2005. Cess Act provides specifically no provision for levy or collection of export duty on goods that have been supplied by DTA to SEZ. Since there is no charging provision in this case, duty cannot be levied. So in both the cases, duty cannot be levied. And that is the only thing that has been given in our answer. So just go through the answer once with the clear mind and everything will be clear. Moving ahead to the next question, that is question 5. Messrs XYZ, a 100% export oriented undertaking, imported DG sets and furnace oil duty free for setting up captive power plant for its power requirements for export production. This benefit was available via an exemptions notification. They used the power so generated for export production but sold surplus power in domestic tariff area. Customs Department has demanded duty on DG sets and furnace oil as surplus power has been sold in domestic tariff area. Though notification does not specifically restrict the use of imported goods for manufacture of export goods. Do you think the demand of Customs Department is valid in law? While answering this question, the first thing that we are required to do is carefully analyze the facts given in the question. The simple thing is that the present entity is engaged in generation of power that is oriented to be exported. Power is something that you cannot store. If the entity has some surplus power, it is quite obvious that it cannot store the excess power and it has to transfer it to someone. In the present case, they have transferred the surplus power to domestic tariff area. That was the first point. Secondly, the things that have been imported for setting up the captive power plant are DG sets and furnace oil, and these have been imported duty free, which was available through the exemption notification. The exemption notification is not specifically restricting the use of imported goods for the manufacture of export goods. In the present case, we have used the entire imports that we have made towards the manufacture of export goods, that is the power that we are supposed to transfer or export. So basically we are involved in the production of power for exports only. It was just the case that we had surplus power and we could not store it, and that is why we sold the surplus power to the domestic tariff area. So therefore it has been held that there should be no duty imposed on the sale done or sale made to domestic tariff area. This has been held in the case of Commissioner versus Hanil Era Textile Limited 2005 by Supreme Court. So this is the thing that we are supposed to answer, and since no duty is leviable, the demand of the Customs Department will not be valid. Now let's move over to the next question, that is question 6. Referring to section 25 of the Customs Act 1962, discuss the following: special exemption and general exemption. So since they have asked us to discuss, it means we are supposed to write a note in the answer, and the note will be really simple. We are just supposed to write the section as it is, so there is nothing much to discuss about it. If you really want to know what this is about, I'll really suggest you to go through the third part of the customs video over here, because these things have been specifically dealt in the third part. Even the next question, that is question 7 and question 8, have been dealt there in detail, and you can directly go through the module then, so that you can understand what has been explained and what we are supposed to write in the exam. There is no specific differentiation that has been made in these regards. We are supposed to write what has been given in the book, and as far as the concepts are concerned, you will be clear when you go through that video. In a similar manner, when we go through question number 10 to question number 15 carefully, we see that they have asked us to write a brief note on stages of imposition of tax and duties, and further denaturing or mutilation of goods, then abatement of duty, and Indian customs water. Then we have defined India, Indian territorial waters, and constitutional provisions. So as you can see that these are the basic things that have been actually covered in the previous parts. As far as the Indian customs water, Indian territorial waters, constitutional provisions are concerned, they have been considered in the basic concepts video. And the abatement portion, denaturing, mutilation of goods is concerned, they have been discussed in the third part of the customs video. And the imposition of tax and duties has been considered in the first or second part. Probably, most probably, it is covered in the first part itself. So you can directly go to the first part and the third part and the customs basics, so that you can clearly get through the concepts related to these. And later on you can directly go through the module to go for the answers portion. Now let's go to question number 9. Goods manufactured or produced in India which were earlier exported and thereafter imported into India will be treated at par with other goods imported into India. Is the proposition correct, or any concession is provided on such import? Discuss briefly. So this is basically talking about the goods that have been imported into India or after a re-export, which means we are actually re-importing the goods or re-exporting the goods for some or the other purpose. So this is the thing that we are going to consider. If this is the scenario, then we have to consider what purpose are the goods brought back into India. Are they returned, are they here for repairs, or are they here for some other purpose? If they are returned, in that case the maximum import duty will be restricted to the duty drawback or refund that has been availed, or IGST that has not been paid. And if they were originally exported for the purpose of repairs and now they are imported back into India, the fair cost of repairs will be added, and the reimportation has to be done within 3 years. And if extension is granted, it will be 5 years, that we have considered in the video separately. And further, we have also considered over there that the imported goods and the exported goods should be the same. The ownership should not have been transferred, and this will not be applicable if it has been done through the if the goods fall within the fourth schedule and the imported goods are exported by EOU or as a unit that has been prescribed in the FTP. Further, the goods should not have been re-imported from the public warehouse. If they were exported from a public warehouse or private warehouse, in such cases, the above provisions won't be applicable. Further, if the goods were here for repairs, it means we had actually exported the goods and we have re-imported the goods for the purpose of repairs. In that case, the re-importation should be for the purpose of repairs only. The time limit has been given as 3 years. If the country is Nepal, the time limit is increased to 10 years, then the goods have to be re-exported after the repairs, and the time limit for export is given as 6 months, which can be extendable to 1 year. So this is the thing that we are supposed to write in the answer. So based on the provision that has been given, the given proposition is correct, and the concessions, if any, are as follows, as we have discussed over here. So go through the answer given. It will be exactly same as what we have discussed over here. This is given in section 20, and if there are any changes, then please correct me in the comment section and do tell me if any. And now let's move ahead to the next question, that is question 16, which asks us to examine the validity of the given statements. The first question is that a beneficial owner of imported goods is a person on whose behalf the goods are being imported. This is 100% valid, as we have considered the definition of the beneficial owner. It means a person on whose behalf the goods have been imported or exported. So if this is the case of imported goods, the person on whose behalf the goods are being imported will be the beneficial owner. So the statement given is valid. Now let next move ahead to the next bit that says customs area does not include a warehouse. This particular statement won't be valid because customs area includes the warehouses where the goods have been kept before their clearance. So basically this question, the particular statement is invalid. Now further, next statement, custom station includes international courier terminal. The given statement is valid because international courier terminal and foreign post offices are included in the custom stations as we have discussed in the definition of the custom station. So therefore the given statement will be valid. Now let us move ahead to question 17. Rock and Rock India Limited imported a consignment from USA by sea. The value of consignment was rupees 7,50,000 and the total duty payable was rupees 1,50,000. The company filed a bill of entry for home consumption, but before inspection and clearance for home consumption, it found that the goods were damaged. On filing a representation to the Customs Department, proper officer refused the claim for abatement because goods were already unloaded. The proper officer is in agreement with the claim that the value of goods has come down to only rupees 1,50,000. Examine the issue with reference to the relevant statutory provisions and calculate the amount of duty payable. So now when we have seen the second para of the given question that says company has filed the bill of entry and the goods were found to be damaged before inspection, the very thing that should click our mind is about abatement, that is triggering of section 22 of the Customs Act 1962. When we go through this section, it is clearly given that on inspection the goods are found to be damaged and it should not be willful, and the bill of entry for home consumption should have been filed. In the present case, both the things have been satisfied and accordingly abatement provision shall apply. Now, moving ahead, the value of the consignment is given as 7,50,000 and the total duty payable on them was 1,50,000. So what we are going to do, simply we are going to take the proportion of the duty to the value of the consignment, which is clearly 1 by 5, okay, 1/5, that is 20%. Now moving ahead, the officer is the officer has been shown to be in agreement with the claim that the value of goods has come down to only rupees 1,50,000. So this is the value after damage, right? So we are going to abate the duty only to the extent of the portion that has actually been damaged. So the value of goods is 1,50,000, and now we are going to multiply it by the proportion that we have calculated, that is 20%. So abatement, so the amount of duty that will be payable over here will be 1,50,000 into 20%, which will be equal to 30,000. So only 30,000 will be paid and the rest of the amount will be waived off. So that is the thing that has been given to us in the question. We are just supposed to write the provision and show them the calculation and the amount of duty payable. Simple. And that's the end of the chapter. Thank you. If you like the video, share it and subscribe the channel. Press the bell icon so that you never miss another update. Thank you.